Hey everyone, Ben here and welcome to Motivation to Invest. Howard Marks is a legendary billionaire investor with a net worth of over $2.1 billion. He's most famous for writing this book right here, Mastering the Market Cycle, which discusses the market movements. Howard believes the market moves in cycles. It goes from pessimism to optimism, and our goal as investors is not to predict where the next market move is, but to actually know where we are in the existing market cycle. His memos are regularly read by the legendary billionaire investor Warren Buffett, so Howard Marks is really the guy in the world that we need to listen to when it comes to investing. So in this video, I'm going to hop into the top 3 stocks that Howard Marks has been buying. So we're going to dive into his 13F filings. This is the report which is done with the SEC and reveal these top 3 stocks. So be sure to watch this video all the way till the end, guys, and I think you'll like what I've got for you. So before we hop right in, guys, if you do appreciate all the research which has gone into this video, feel free to give this video an early thumbs up. That helps out tremendously the channel. And remember, if you haven't subscribed and you do want to join the investing family and get access to investing tips and exclusive stock market picks, of which I'm personally investing into, then feel free to join the investing family by hitting that subscribe button and turning that notification bell on. And with that being said, let's dive in. We can dive into his latest trade. So this is what Howard Marks has recently been buying, and kicking things off at stock number 1 on this list is SHLS Technologies Group with the ticker symbol SHLS. And this was a new buy by Howard Marks, and he paid an average price of $35 per share, which, wait for it guys, very close to where the stock is trading right now. In fact, the stock is trading 13% lower than where Howard Marks has purchased the stock on average. So this could be a potential buying opportunity. SHLS Technology was a recent IPO in 2020, which I did cover on this channel. SHLS Technology is an Oak Tree-backed solar equipment supplier, files for a $100 million IPO. So this was actually the biggest solar IPO ever. And the company actually went public for around $5 billion. So as you can see here, the company actually went public around $39 per share. However, the stock has slid down now by around 24%. It actually dropped as low as 44% down. It dropped to $21 per share, which was really exceptionally cheap for this company. It's now rebounded slightly, up 37% over the past week or so. What does this company actually do? Well, hopping in right here, this is a brief overview of the investor presentation. So this company provides a selection of products called EBOS, which are the electrical balance of system solutions for solar energy. Now that may sound confusing, but basically think of the connectors, the switches, these different parts here. You can cable assemblies, junction boxes, inline fuses. So the unique thing with this company is its products can actually be installed without using an electrician. So this actually saves on labor costs for the solar installers. It's also cheaper to install, faster to install, and basically they call it a better mousetrap. So this company seems to have a better product than all its competitors, and it also has a strong competitive advantage. So the company has a series of patents. So it has 17 patents and 2 patents pending, a proprietary manufacturing process which improves reliability of the system, and a leading market position. So they estimate that 54% of solar energy generation capacity installed in the US in 2020 used at least one of their EBOS products. So that's a real nice penetration into the existing market. Now, total renewable energy installations in the US equal around 12% of the entire energy generation capacity. However, that's expected to increase massively over the next few years, mainly thanks to the Biden administration and of course all the tailwinds from global warming. I noticed the company insiders also have a large holding in the company, so they have skin in the game. The large insider holding Dean Solon, he owns 37% of the company and he's a director. So to me, that means they're very bullish on the prospects of the company, and you're investing with the owner, which is something I really like to do with any investment. Now, the company's forecasted to actually grow extremely fast over the next few years. It is a profitable company at the moment, but they're not bringing in a massive amount of revenue, $176 million on a $5 billion valuation. So quite a high valuation at the moment. But the revenue growth for next year predicting 34%, 45% over the next 2 to 5 years. I estimate the fair value per share to be around $22 per share, which is exactly where it bounced during the stock decline. So that could be an indication of the fair value as being correct. However, they are expecting even higher growth, so you could easily justify this $30 share price. The only risk with this company I can see is it's priced for perfection. So let's say they can't meet their 50% growth over the next 2 to 5 years. Let's say they can't do that because they have this great product, it's patent protected, and they're assuming that's going to be adopted by all these different solar manufacturers, and that's going to be pushed by all the government incentives. But really, that's all assumptions and all projections for the future. So this company really does have a lot to live up to, but still, I think it's a fantastic company. And remember, guys, this is not financial advice. I'm just giving you info on exactly what I'm doing with various companies. Right on to stock number 2, which Howard Marks has been buying, and that is Hims & Hers Health with the ticker symbol HIMS. So Howard Marks paid an average price of $16 per share, and the stock is currently trading at $12 per share. So it's down minus 27%. So this is a lot cheaper than Howard Marks was actually buying the stock at. And it is a stock I covered on this channel, but it also shows that even these legendary billionaire investors do have to put up with the volatility of stocks, and especially some of these more speculative plays. So diving into Hims & Hers Health, this was a former SPAC, I believe, and it went public in December 2020. And as you can see, the stock went on a rampage. It was up 83%. And a lot of people did get caught in this bull run here because they didn't want to miss out on such an incredible company. However, there has been a major correction down now, many thanks to rising interest rates. And the stock's down minus 50% from its highs. It's still got a high valuation in terms of a stock, as the revenues in 2020 were just $148 million. And on a $2.24 billion valuation, that's an extremely high price to sales ratio. What does this company actually do? Well, Hims & Hers Health is an American telehealth company which sells prescription and over-the-counter drugs online, as well as personal care products. And the idea of Hims & Hers Health is it really does take away a lot of the stigma which men have and women have with regards to mental health, sexual health, hair loss, and many, many more things which usually are considered a taboo and you can't really talk about them. But Hims & Hers is attacking that billion-dollar market by actually providing products in a discreet and online way. As you can see, here's one of their provocative adverts. To have an issue isn't weird, not handling it, that's weird. And that's what they're trying to really change with regards to many issues which men and women both have. Hopping into the numbers right here, we're here on Stockopedia. There's a discount link for 25% off in the description below if you guys do like this platform. And as you can see, yeah, revenues, $225 million in 2021 predicted. The company is unprofitable, but the losses are decreasing over time, which is good to see. And as you can see here, yeah, price to book value 11. Yeah, the numbers are not looking fantastic, I must say, but this is really quite a long-term play. It's quite speculative, but still, I do think it's a fantastic company. They have great marketing, they have great products, and from what I can see, this could really be a game changer in the healthcare industry. Now, diving into a discounted cash flow, again, quite difficult to value a company like this, a more speculative play, but that says its fair value is $4 per share, and it's nowhere near that at the moment. So really, this is a stock I would look at the technicals if you're thinking about investing and really take a look at the charts and see where this stock will find support. Seems like it has previously found support around $12 per share. And remember, guys, it is down 50% from its high. So I wouldn't make this an extremely large position in your portfolio. But yeah, it could be a speculative play if you want a bit of spice in your portfolio.
NASDAQ? That sounds delicious. I'll take 2. Medium rare.
And that is Sorrento Therapeutics with the ticker symbol SRNE. And Howard Marks paid an average price of $10 per share for this stock, and the stock's now trading at $8 per share, so it's down minus 16%. Diving into the share price here, we can see the stock reached a high of $16 per share in February 2021, and then it's down 46% again. What does this company do? Sorrento is a clinical stage antibody-centric biopharmaceutical company developing new therapies to treat cancer and the global health crisis. Now, I'm always getting asked on this channel for my biotechnology plays, and biotechnology is a really difficult industry to actually decipher and even value companies in this industry. So if we can watch what some of the legendary billionaire investors are buying, then that could give an indication. But just be aware, biotechnology companies tend to have higher risk and also are more volatile, more speculative, but they do have a really high upside. So for example, recently, Sorrento receives authorization from the UK regulatory agency to conduct a phase 2 clinical trial for their CV19 drops in an outpatient setting. So this could really be an interesting tailwind for the company. Hopping in right here, this is what this company does. So of course it develops programs for the global health issue, develops cell therapies for cancer, immunotherapy for cancer, pain relief, and lymphatic delivery. So this is involved in quite a few areas, but really the main ones I can see are, of course, cancer and the global health crisis. It's attacking both of these major problems in society. The numbers are actually surprisingly good for this company. So the company was burning a lot of cash. However, they're expecting to become profitable in 2021. So they're going to 20x their revenue from this point to this point. Now, to me, that seems unbelievable, but I'm assuming that's due to the whole global health issue. Maybe they have a major tailwind. The share price doesn't seem to have reacted too much from this major boost. Well, it's up 40%, but really considering the highs it was at, and they're expecting $1 billion in revenue, then really, yeah, this looks like a fantastic company. Sales growth, 84%. I would verify that real big jump in revenues because that does seem ridiculously high. The PE ratio for this company is just 5.4. So you're not paying 5 times the company's earnings, and it's got a PEG ratio of 0.1. However, the price sales ratio is 54. So the price sales ratio looking backwards is high, very high valuation, but looking forwards, it's actually looking quite cheap. It's looking like a price to sales of 2 looking forwards. So yeah, this is one I would verify if I were you guys to just check the details with this stock, but yeah, it could be an interesting play for a biotech stock. And remember guys, if you do want to access exactly which stocks I'm buying, selling, my entire 6-figure portfolio, my stock investing journey of how I turned $20,000 into over $250,000, you can find out all that and more as part of my stock research platform. So if you dive into the Motivation to Invest website, motivationtoinvest.com, or you can click on the link, first link below, you'll get access to our private Discord group, our thriving Discord group, our advanced valuation models, my stock research platform, over 46 different stocks, and you can even sign up for our ultimate investing strategy course, where I've basically took the strategies of all the greatest billionaire investors and combined them into one exceptional course with my own experience, of course. So are you the type of person who's interested in stepping up their investing game and actually becoming financially free? If so, then the Ultimate Investing Strategy course could be for you. So if you are interested in that, you just want to find out some more details, check out that first link in the description below. I'll also leave a special discount coupon code down there in the description below, only available for the next 48 hours. So if you do want to sign up and lock in that discount, now is the perfect time to do so. And with that being said, thank you guys so much for watching. I hope you have an incredible day, and I'll see you in my next video. Invest safe.